We're going to start at 6:15 from now on. 6 o'clock was it was a worthy goal, but we haven't been able to cut. So 6:15 every night. Follow us Monday through Thursday. So anyway, we're here. This is we're going to talk today. We're going to talk about crypto tax 101. What you need to know about cryptocurrencies and tax. I covered this on my radio show before, but I'm going to cover it here. So stay tuned. Let's start the show. So welcome to the show. We're going to talk, as I mentioned, we're going to talk about cryptocurrency. We're going to talk about, going back to that. Didn't want to do that. Let's go back to Steve. I have to turn that off. It's the way this all works. But anyway, thanks so much for joining us here today. As I mentioned, we're going to talk about crypto tax 101. What you need to know if you are invested in cryptocurrency, or if you're thinking about being invested in cryptocurrency. Last night's show, we talked about different strategies, taking advantage of the fact that crypto is not a stock or bond. It's treated as property, and so the tax consequences are different for crypto as a stock or bond. Many people are investing in it like a stock or bond, but it's treated differently by the IRS. And so that's what we're going to talk about today. So generally there's two types of different taxes when it comes to crypto. You got capital gains, you got long-term capital gains, short-term capital gains, and you have income taxes. These are the two types of taxes. So let me pull this up and we can review it together. Okay. The first one, let's talk about the capital. Let's talk about capital gains. So first, there's certain events that we call taxable events when it comes to cryptocurrency. Okay, so anything you buy, once you buy it, that's not a taxable event because you haven't realized a gain or a loss. But anytime you get rid of I shouldn't say anytime you get it, it's not a taxable gains. We're going to talk about that because it can be income tax. So the first one's capital gains. So selling for cash. If I have cryptocurrency and I sell it for dollars or pesos or yen or the British pound, whatever other kind of currency I get, that is a taxable event, right? So whatever I bought it for, if I bought it for less than what I sold it for, that's a capital gain. If I sold it for less than I bought it for, that's a capital loss, but it's a taxable event. Okay, so that's the first thing you have to know. The other type of capital event let's talk about is capital event. The second capital event is the purchase of goods. So if I have cryptocurrency and I have it and it's in my wallet or it's in and these are terms we could talk about defining. Then I buy something with the crypto, which is what cryptocurrency is designed to do, right? It's designed to effectuate the sale of things across borders and across the internet. So make it easier with very low transaction fees. So no matter what I buy, a service or a good, that is a taxable event. Again, same thing with selling it for cash. If either it's a capital loss or it's a capital gain. And so that's the next one that we have. The third thing we have to is the trading or swapping one crypto for another. So if I have Bitcoin and I want to make it into another one, and I don't want to name any other ones because there's so many nowadays, right? Any of the altcoins or whatever. But if I have one and I'm trading it for another, that is a taxable event. Okay, so if I had one coin or portion of a coin worth $1,000 and I use it to buy another coin, then that is a taxable event. Could be a capital gain, could be a capital loss. So that's the end. Now the second type is what is, as I mentioned, is income taxes. Okay, so when is it income taxes? So if I receive a cryptocurrency in an airdrop, and an airdrop is when generally I get that for free. And we can talk about what an airdrop is. Again, we can go to the dictionary. We'll do that at the end of this. After we review this, we can go back and look up what is an airdrop. Some other terms that we might need to know in order to understand cryptocurrency and the vernacular that goes along with it, right? So again, if I get it, and usually that's a marketing tool or something that somebody's trying to convince me that to do something, and it's a bonus. Now the good news is that this isn't generally worth very much, and so if I get a coin, or they're usually not worth that much, and it's not going to be a lot of income. Okay. The second one, interest from DeFi. So this is about financing. So, and we'll talk about, again, this is another term that we can use in crypto, and we'll get to so if I have interest from some financing that I have, and the interest I'm getting is in crypto, well, that's income tax, and that's a taxable event. Next one. The next one is, mining, or block rewards, or transaction fees. So we talked about mining, and we can talk about this again because I think a lot of people don't understand what crypto mining is. But you're creating value, and it's a service that you're providing. And for that service you receive coin, you receive value, and when you receive that value for the mining, that is a taxable event. And because it's a taxable event, it's income tax, because it's something that you're doing and you're being rewarded for an activity that you're involved in. So that would be income taxes. Okay. I can't see very well. So let's go down. The fourth one. The fourth one is liquidity pools and staking. Now, a liquidity pool, when it comes to crypto, is the way that they facilitate the trading, the buyers and sellers. In a traditional market, in order to sell something, you had to have someone buying there to buy it, and these markets matched buyers and sellers, and it came to a price, and that's how they sold it. These cryptocurrencies are different. There's not always a buyer and seller on either side. They have these liquidity pools, and they're designed to facilitate the transfer of these of the cryptocurrency. So there's no stalling, right? If I'm trying to sell something and there's no buyer, then I'm stuck with it. So in order to again, the liquidity pool and staking is very the same thing, is that you put money into a pool and then you are rewarded per transaction for the liquidity pools. And that would be income because you're providing a service. And then I think the final one that we have here is payments for work or services. So the more and more common that as I perform services, no matter what those services are, if someone is paying me in cryptocurrency, then that is income. Just like if they were paying me in cash, it doesn't change anything. It doesn't change the nature of the income because I got it in cryptocurrency. So whatever that value was at the time that I received it, that's the income that I received. If it goes up by Monday, say I'm doing something on Saturday, and then I want to, and I go to cash it in on Monday, and it's worth less than what they paid me on Saturday. Now I have a capital loss because I've just because I got it at one price, which was the Saturday price, and I sold it for another price, lower, and that was the Monday price, and vice versa, right? If it's higher on Monday, I cash out. That's a taxable event too. So these are the simple terms when it comes to income tax, cryptocurrency tax 101. I actually say in the title that it's a 10 minutes. So I'm going to try to cut this short, this video, because I want to be able to provide this information in a very short period of time. Because I think then people will take an interest in watching. So anyway, this is the way it works. If you have a question, now we can go to the, let me go to the crypto dictionary. We can just define a couple of these things very quickly. Okay. So we talked about the DeFi. Okay. So let's go down here. We'll find the DeFi. Uh-oh. Did I pass it? There it is. DeFi is an abbreviation of decentralized finance. It can be defined as a new financial ecosystem consisting of various financial tools, apps, and services utilizing blockchain technology. It's an umbrella term for, and a lot of this is all, they're generally umbrella terms, right? They capture a lot, and we're going to talk about airdrop next. We'll do airdrop next. It's an umbrella term for these projects combined, and is growing daily. Examples of DeFi functionality are banking services in the form of stable coins, decentralized exchanges, derivatives, prediction markets, or lending and borrowing systems. The last one can be either peer-to-peer or with a pool. It is a combination of replicating products and services in the traditional finance industry, as well as innovative new ones, only possible with blockchain technology. So that's the first one. So let's talk about airdrop. See if I can find that here. Airdrop. There we go. So an airdrop. Let's go up. An airdrop is a way to distribute coins. End users can generally get coins for free or in exchange for a small task, such as subscribing to a newsletter, sending a tweet, or inviting other people via a personal affiliate link. The opportunities and dangers of an airdrop are described in details in this article. What is an airdrop? And again, this is generally marketing things. They're going to pay you a very small fee for, again, if you're going to pass it along to someone. You get a newsletter. They say, hey, if you pass it along to your friends, we'll give you so much for everyone that you send out. And so then you send them out and you get these coins in return. And this is what an airdrop is. Okay, so throughout our show here, not today, but throughout the days to come, we'll go through this over and over again, okay, and answer these questions about what does all this mean? Because you hear these terms, you don't know what it means, and then so you think you can't get involved in it because they're using some terms that you're not familiar with. And usually, as I mentioned, usually it's not complicated. They're just using some form of some new term to define older things. So it's not a big deal. So anyway, that's what the show is today. The cryptocurrency tax 101. If you have any questions, you can call me now. I'm going to ask you subscribe. If you find this information helpful, or if you in any way, first share it with people. Please share and then subscribe. It would help us very much if you did that. So we'll catch you the next show. And again, anything I can do to help you, you should give me a call, 312-664-6649. Again, that number is 312-664-6649. My name is Attorney Stephen Leahy, and this has been T3, Today's Tax Talk.